Assalamu alaikum and welcome to the Oasis Focus and Finance Show. I'm your host, Shafiq Morton. In today's show, we have a look at financial planning for the next financial tax year. The tax year has just ended and this is the best time to set your financial goals. In today's show, we're going to be focusing upon three key aspects. The first one is how to set those financial goals. The second one is how you can get permissible tax breaks. And the third one is how we can maximize and plan for long and short-term savings. Joining me in studio today are Hassan Motoala and Ebrahim Rawoot. Gentlemen, assalamu alaikum.
Wa alaikum salam, Shafiq.
Ebrahim, you're going to fire off first. How do we maximize, how do we understand financial planning? How do we get the best out of financial planning?
I think, Shafiq, it's a very important point to start off with, and I think really the first basic step is to be able to understand how do I improve my current situation and how do I improve my future financial situation, and really where is all this money that I'm earning, where is it actually ending up going to? And really by establishing this budgeting framework, you're able to get a very clear understanding of what my financial position is, where I am, and where I would like to see myself in the next maybe 1 year, 5 years, 10 years, and using a long-term approach as well. And really it's understanding what that budget is really going to be able to entail. Now you mentioned it's the beginning of the it's the beginning of the new financial year in, but then also 1st of January is a very good starting point as well, because hopefully many of us do get salary increases during that period. You also get a good understanding of what those fixed costs is that you are going to have to budget for, and the typical one nowadays is school fees. It is and it has become so much more expensive. But understand, these changes to your financial situation are now also accruing for what is it that you need to prepare for. But ultimately what you want to get to is, what have I got as an end saving amount that I can utilize for savings over my short, my medium and my long term. And there's this huge talk about tax incentivization, and there's a number of products that we can speak about. And then is really to establish where I am, what I've managed to achieve in terms of my income, in terms of my expenses, and then my savings opportunity. So to create a strategy of a financial year end in mind and the start of your new financial year end, a good plan really starts with taking the end in mind. It's no use you want to project 25 years, but you actually don't know what the current situation is. And there's a couple of points that we need to look at. So I think the most important point is identifying the goal. What is it that I really want to achieve over a short term, over a medium term, and over a long term? And short term could be, I'm planning to do a holiday in December. What is it that I need to put aside to achieve that goal? Then there's also medium term savings, and that could be things like education and university fees. It can equate to a 5-year program, a 10-year program. And then very critically is that long-term savings plan, and we speak about it on just about every show, and that is on retirement. So identifying your goals, I think that is key point number one. Then it's also understanding what is it that you as an individual is worth. What have you accumulated as assets? What have you accumulated as savings? What is it in terms of your income that you're earning? And we should not only be looking at a salary income, we should be looking at income that can equate to rental that you're receiving. It could be interest that you're earning on a fixed deposit. There's a number of aspects in terms of income, and that is a very good starting point. Well, now you've looked at the assets, you looked at the income, then you also want to look and say, but what expenses am I actually incurring? And we need to jot down, the fixed expenses, and fixed expenses could be, paying towards a bond, paying rental every single month. But then it's also the variable expenses. Am I that type of person that goes every morning to the coffee shop and I buy myself a cappuccino? So yes, while it's costing me 25 Rand for every cup, 25 Rand over a week, it's 125 Rand. Over a month, it's 500 Rand. All of a sudden for the year, you're spending 6,000 Rand on cappuccinos. So take all these small little expenses into account, take the fixed expenses into account, and now you have a position where you're saying, well, these are my incomes that I'm accruing and earning, this is my expenses that I'm incurring, and the difference between the two is now my savings nest egg. But now we need to be prudent and say, but you know what, there are certain expenses that is the nice to have, and then there's a certain expenses that is the essential must have. You know, you can't negotiate on things like medical aid or, you know, paying the bond, paying the rent. You know, these are fixed costs that we need to adhere to. And then saying, what can I now change within this financial plan of mine in order to allow for a bit of room for savings? And now I say to myself, I've got this bit of savings, what are the opportunities out there? And there's a number of products which we will address, whether it is the tax-free savings product, which government has introduced. And you know, it's really about incentivizing the general public out there to be able to save. You know, the culture for savings in South Africa, it's very poor, and we need to ensure that we address that. And government has certainly played their part. It's us as individuals that needs to commit to that. While there's tax-free savings products, we spoke about, you know, the retirement annuity plans, there's the pension provident fund plans. So even though I have a company-sponsored retirement fund, whether it is through the likes of a Telkom or a Sasol or Anglos, whichever company I'm working for, don't believe that that is sufficient for you, right? That is just the entry point. It's you saying, I want to take a little bit of extra of my savings in order to ensure that I boost my retirement savings in order to be able to retire comfortably. You know, Shafiq, I think on previous talks we spoke about we can't rely on the family for financial support. Really, earning state pension is not going to put the bread and the butter on the table. We want a certain quality of life, and the earlier we start with it, you know, the better we have to achieve that objective at the end. If you wake up at 65 years of age, you know, saying the chances are it's going to put you in a difficult position. So at a very young age, I'm 25, I just started working, think big. Think, what is it that I want to achieve? I want to maintain the same quality of life. Nothing is impossible. It's about how you commit at the beginning that's going to achieve that objective.
Absolutely. Now, Hassan, changes in income and expenditure obviously can affect what happens to tax. What is your advice to us here today? How can we benefit from this, and how can we actually do it?
Shafiq, look, there's obviously a couple of things we need to be taking into account when you're working in a budget. You know, when you're working in an individual budget, as Ebrahim highlighted, you've got your income, you've got your expenses. But there's various form of income, there's various form of expenses, and obviously the differences is that certain forms of income attract different types of taxes. So for example, you know, whether you're working for a salary, you're working in a company and you're earning a salary, you'll be paying towards your PAYE. It's a form of tax. But for example, if you may be receiving dividends from your investments or income from income type of products, there's different forms of tax that may relate to that, dividends tax and the like. So there's obviously differences, and you need to be cognizant of that and see how most efficiently and tax efficiently you can manage that. One important aspect to look at, or there's one or two important aspects to look at, is to, when you're looking at your budget and taking into account that, you know, this is your income, these are your expenses. How can I effectively manage the tax? And there are certain forms which we can manage it effectively. Ebrahim highlighted and touched on about retirement and pension. It's a very effective manner where, besides taking into account that you're saving for your long-term retirement and saving to make sure that you have a high quality of life in your retirement as well, you get the benefit now immediately in terms of tax efficiency and tax reduction. So, you know, you're allowed to contribute up to 27%, 27.5% of your take advantage of that. And that's not only a retirement annuity, it's contributions towards your pension and provident funds as well. And that's an important aspect. And you know, very, very shortly, that window closes because your tax year ends at the end of February. So it's important to take advantage of that and obviously benefit from that from a tax perspective. The second point I think to highlight is as well, and it's important because, you know, we in terms of as Muslims, we always, you know, be it zakah, sadaqah and the like, it's an important part of our lives. Zakah is an important way we play a part in terms of contributing and distribution of wealth to ensure that those that don't have it benefit and can uplift themselves. Similarly with sadaqah, contributing towards sadaqah, contributing towards to help the needy out there. Now, government allows you in terms of donations towards registered organizations. So yes, we do have who we can give to family, and we can give who we know we can. But there's many of us may have to contribute quite a bit towards zakah, and we like to contribute in terms of sadaqah. Also utilizing registered organizations, public benefit that have this that can give you a tax exemption. And guess what? You can contribute a meaningful amount in that manner and benefit from a tax deduction on that. So here, alhamdulillah, you will do your contribution towards zakah, your sadaqah, you get the benefit, but at the same time, you're getting a tax benefit and tax efficiencies coming through from your taxable income as well. So those are means, let's utilize it, get the benefit of that. So seeing it from an income, expenditure, but also from a tax perspective, how we can be a lot more efficient and budget and plan for it more effectively.
Hassan, very briefly, the last question of this particular segment. I've done my personal budgets. Income, expenditure, that's sorted. I know how much I've got to pay to tax. What's the next step?
Basically debt. Debt is a swear word in many people's lives, including myself.
Capital letters.
Capital letters. And I think, I want to spend a bit of time on this when we come back from the break, is that debt is something which sometimes, unfortunately, can keep people enslaved for years and years. And I think that's one key aspect we need to look at and address. How can we free ourselves from debt and live a life free of debt and make sure that it doesn't enslave us for our life?
I think what is important, and just to add to that, Hassan, and you mentioned this 4-letter word called debt. We spoke about this financial plan. We spoke about income and expenses. We should actually go one step further and say, you know what, let's plot a balance sheet. What is my assets? What is my liabilities? It's no use you having all the assets in the world, but your liabilities is more than your assets. You're not in a good financial position. Also go one step further and say, well, of all those liabilities that I have, what is the most expensive liability? You could have a bond of R500,000. There could be a certain rate that you're being charged, but then you could have a credit card of R100,000. It's a fifth of the debt of the bond, but the interest on the credit card is substantially more. So we are not going to be able to progress if we actually don't know what is it that we are being subject to and what we need to work towards in order to be able to minimize that debt. And really, Shafiq, we can speak, but the best way to do it is plot it on a spreadsheet, plot it on a piece of white paper so that you can visualize it. You can now express what is the importance of this financial plan to be able to see where I'm going to be in the next 1 year, the next 5 years, and the next 10 years.
Hassan, before the break, you were talking about debt, and this is an important topic, and I know that you have quite a few things to tell us about debt and how we can reduce it and how we can get rid of that 4-letter word.
Avoid expensive debt. And expensive debt means basically taking these personal and short-term loans that you'll get your SMSs or you'll get there's a lot of text messages that comes. You qualify immediately for a 10,000 Rand loan. Just apply and we'll give it to you. Those type of messages. Avoid that.
That's not Father Christmas.
That's not Father Christmas. Father Christmas is not coming and telling you, I'm giving you 10,000 Rand. Pay me in 1 year's time. You're only going to pay me 10,000 Rand back. Not happening. Very importantly, that's expensive debt. In those cases, you can be charged 25-30% per annum interest. It's an expensive debt, and you want to avoid that. Second one, and which many people, are quite, they use it a lot, credit card. Whether you're going to do your grocery shopping, or you're going to do, you're given that short period, but make sure that your credit card balance is paid before you start getting charged on that. Because the interest rate also and the cost of debt on credit cards, it's also expensive. In excess of 20% most cases. Very expensive debt. Avoid that form of debt. So that's a key aspect because many people, to fund their daily lives, in the sense of funding food, funding, clothes, are using that form of debt. Live within your means. An important concept, live within your, don't have to keep up with the Joneses or the Beckhams or whoever they want to call it.
The Joneses have got a bigger credit card.
Exactly. Don't have to do that. Live within your means. You know what your income is, you know what your expenses are, live within that. Now there are other forms of obviously expenses which are substantial and require larger capital, and one of your most important one is obviously your home. Now, for example, you may be renting, but having your own home where you, your family can live in for long term is always it's an important aspect. It's important, and it's where you can, rather than paying sometime towards paying the rent, if you can afford towards contributing towards a house long term, do that. And I think that's an important aspect where you're financing or you're buying into something, you're purchasing something which will benefit you and your family long term. And therefore that's an important, and there you may have, for example, you may have saved over a number of years where it allows you to maybe contribute 10-20% of the cost of it, but you may need to finance the rest of it. That, I think, is an important aspect where you can get Islamic type of financing, get that, but it's an important one where as part of your monthly expenditure, this now you say, okay, I will contribute toward it, but if I get a bonus or if I get some extra income that comes in from elsewhere, utilize that towards trying and paying down that debt as well. So that instead of paying it over 20 years, if that bonus, you get a nice bonus this year, a nice bonus next year, you say, you know what, tell the wife, tell the kids, you know what, yes, we'll use a little bit towards maybe a small family holiday, locally we'll go for a holiday. Let us try and pay off this debt. So maybe in 5 years' time, if I'm paying off the debt quite a bit, we can, inshallah, maybe go for a holiday overseas. Think like that. And then you can say, okay, well, using that bonus, you're paying down the debt quickly, then longer term, you freed of the debt, and then you can spend more towards you and your family longer term, and you can enjoy the benefit of that and not have to worry at the end of the day, and where you sleep and have, what, I've got this burden in my head, I've got this debt that I have to need service. And that's an important, so your house, and another one also is obviously the car. The car is more shorter term, generally you'll get a loan to finance it generally 5 years. But there again, if you can pay it off, pay it off. Remember, the car, unlike a house, cars, soon as it leaves the showroom, generally when it's a new car, it's already depreciating in value. A house, hopefully it's in a good location, tends to appreciate over time, and that's an important aspect. So importantly, utilize your excess income that you may have in the form of bonuses or other forms of income, pay off the debt and pay it off quickly. Very importantly, avoid high cost debts such as your credit cards and your personal loans.
Ebrahim, if I'm able to reduce my expenses, then how do I go about saving, or can I start saving?
Reducing your expenses, reducing your debt ultimately means that you are freeing up more cash for you to be able to save. And when you're in that financial position where you've got this favorable bank balance, you've got a favorable savings, all you're doing is creating a bigger nest egg for yourself to be able to enjoy in the years to come. And this is where you now can start budgeting for things like the school fees. Do I pay the school fees over a 12-month period? Or do I say to myself, I've managed to save a little bit extra, I'm now going to take advantage because the school might give me a 10% discount or a 5% discount. I'm going to take it and pay the whole year's fees right up front at the beginning. All I've done is I've freed myself from, and maybe not using the word burden, but I'm freeing myself from that stress of having to budget for it every single month. And then there's a number of other things that you can do. You can now start saying, let me start attending to that most expensive debt, whether it's a credit card, personal loans, or let me work towards paying off my bond even quicker. Because ultimately what you want to do is keep the rand value the same, Hassan, and then reduce the term period. And really start putting yourself in that very strong financial position. There are a number of products out there that you can use for this excess savings that you've created. And remember, it's all about introducing a culture of savings in one's life, not only to you, but to the people within your house and also to your extended family. And start talking, start communicating this. You know, when I start seeing a smile on your face every single day, Shafiq, after interest rates have gone up, you're going to say to me, Ebrahim, but it's not really affecting me. I've managed to settle all my debt. So I want to be in that position where I'm not having to worry about the stresses of life because I'm just so over my head in debt.
Hassan, how does one integrate a savings scenario into this financial plan?
When you look at your budget and you have that excess amount at the end of every month, and be it, for example, that you don't have a lot of debt, or you've already been paying down your debt as well. But importantly, that excess savings doesn't mean it's now an incentive or a right now that you need to go and splurge. Mm-hmm. Save. There's different goals that you need to save for. Be it your child's education, be it for a long-term need, whatever it may be. Be it for Hajj. There's various aspects you want to save. Save. But how do you save, and what's the most effective means of saving? So there are short-term type of saving pools. So for example, you may need the money in 12 months, 18 months, 2-3 years time. You put it into short-term income type of related products. The liquidity is there, your capital is relatively stable, and you can access it relatively quickly. So there are products that can cater for that, and I think it's important to. And you're getting obviously the return will be relative to other more like equity and property will tend to be lower, but it's a lot more stable. It gives you that liquidity, and if you need it in 12, 18 months time or 24, you can access it a lot more effectively. Then there's those longer term goals that you're talking about, 5, 10, 15-year type of goals. It's important then to incorporate asset classes such as equity and property, which derive returns generally well above inflation over the long term. We've seen equity and property, if you look at history, over 10, 15, 20, 25 years, have generated substantial real returns for clients over time. Now the balance funds encapsulates all of that because you've got equity, property, and also income within those products. And therefore, it's the most suitable product and savings vehicle for clients to save over the medium to long term. So you've got an objective. You're saying, my child's going to start. These days, in fact, from primary school, mm-hmm. education is costly. It's costly. So you need to start as soon as your child is born, or you're planning. You say, let me start saving savings pools for my child. I need to know because in 5 years' time when he's starting, or 5 or 6 years' time when he's starting grade R, I'm going to have to fund that. So immediately you need to, and it's not only from grade R, that's another number of years up through to university that you need to save towards that. The balance funds are fantastic for that. Yeah. And I think it's important on a regular basis, either you say, on a monthly basis, either through a debit order, or, it could be like, as you come into excess cash, you put in a lump sum and basically plug it away. And those tax-free savings accounts, first utilize that. Mm-hmm. You're given that incentive to save on a tax-free basis. There's a 30,000 Rand per annum limit per individual, but utilize it. Thereafter, utilize your unit trust as a savings method. And obviously from a retirement perspective, and I think Ebrahim will touch on that, is obviously, and we've spoken about that, is that's more a longer term perspective as well.
And talking about longer term perspective, we've dwelt a lot on short and medium. Ebrahim, the final answer, long term perspective.
When you speak long term, I think the only word that really comes to mind is retirement. Don't at 25 years of age just started working and say to yourself, but my retirement is 30 years from now. It's the last thing on my mind. And what we fail to realize is that time just catches up so quick with you. And before you know it, you realize, oh my goodness, I'm actually going to be caught short because I could potentially have saved insufficiently for my retirement. And really what you don't want to be doing is, reducing this quality of life that you have so become used to. And the only way you're going to be able to achieve that is through a very strict process of saving. And two questions that you really need to ask yourself, Shafiq, is what is my pension that I'm contributing to going to pay me when I'm going to retire? And secondly, for how long is it actually going to pay me for? So if I intend retiring at 65 years of age, have I got sufficient money in my pension in order to carry me through my living years? And we don't know how long that living years are, but we do know that people are generally living healthier lifestyles. We've got far better medical facilities today than what we had 50 years ago. So we need to be cognizant of the fact that we need a pool of savings that's going to carry us. And don't be fooled by the fact that it's only yourself. It's you, it's your spouse. You might still have children that that's dependent on you, when you're entering those retirement years. And hopefully you do get a bonus. We call it the 3-prong approach. Take some of it, Hassan mentioned it, take it and enjoy it, take a portion of it and save it, and take a portion of it and settle it towards your debt. And it's that portion that you're saving, you can add it to your existing company-sponsored pension or provident fund. You can add it to a retirement annuity. And all you're doing is you're creating this wonderful tax incentive that government is so encouraging people to take, and you're improving on that end result of a secured savings nest egg for myself when I do eventually retire. Now, we spoke a lot, Shafiq and Hassan, and I think the important thing is someone sitting there is probably saying, but cheapest, this is a lot for me to digest. And I don't think we should be saying for 1 minute that we're alone in this situation. We're not. There's professionals out there that can assist. We're just a telephone call away to be able to start putting you in a direction where there is going to be financial freedom. Am I going to be the one that's going to have to wait for the handouts? Or am I going to be the person that's sitting strong and with a big smile on my face saying that, I, from a very young, early age, I put a plan in place, and alhamdulillah shukr, that plan is actually now working for me.
Absolutely. Financial planning equals financial freedom. Ebrahim and Hassan, shukran. Thanks for chatting to us.
Thank you.
Thank you, Shafiq.
And that concludes today's show on the benefits of financial planning. A special thanks to our guests, Ebrahim Rawoot and Hassan Motoala. Should you wish to watch this or any of our other shows, you can log in to the Oasis Crescent YouTube channel. Should you wish to contact us, 0860 100 786 or email info@oasiscrescent.com. Until next time, I'm your host, Shafiq Morton. Assalamu alaikum wa rahmatullah.